Zeroing in now on another big story we're watching, which is Bitcoin. Already in the third worst week of the year here. You can see that is down a little over 4.5%. I want to take a look at Bitcoin, though, year to date, still obviously having a lot of success, up 38%. You can see, though, in the month of June, a little bit of capitulation heading towards that trend line, similar to the kind of dip that we saw in early May. It'll be a big question mark as to whether or not Bitcoin is going to pass that threshold, given some of the downward pressure that we've seen as of late. We already know that the start of this week for Bitcoin and the broader crypto market has been rough as well. So investors keenly watching this digital asset to see what the moves might look like moving forward. And for more on exactly that with regards to crypto markets, we're going to bring in Fred Thiel, Marathon Digital Holdings CEO. Fred, thanks so much for being here. As always, really appreciate it. Talk to me about this downward pressure that we are seeing in Bitcoin. I'm curious from your perspective, is this being driven by a demand issue, or is it being driven by macro questions about what might be coming next for the Federal Reserve?
Well, it's a couple of things going on. One is you have the German government, the Criminal Bureau is selling supposedly about 50,000 BTC. They've already sold a few thousand of those Bitcoin, so that creates a bit of a supply shock. Then you have Mt. Gox bankruptcy, supposedly will be distributing the Bitcoin in that bankruptcy, which is a very large volume of Bitcoin starting in July. You have macro expectations impacting generally the risk-off assets. And so Bitcoin has been very correlated to risk-on as of late. So there's a lot of things going on. As well, post-halving, you have miners selling a large proportion of their Bitcoin that they're mining as a way to continue to fund operations and their attempts at expansion. But we are seeing hash rate starting to come off. The difficulty rate will likely have a significant downward adjustment here in the next at the next update. But I think right now what we're seeing is just basically a lot of supply in the market. And you've seen about $1.2 billion of outflows from the ETFs. So generally, demand is kind of waiting. Some analysts have predicted that Bitcoin could drop down to about 57 as a support level. We'll have to see. But clearly, Bitcoin right now is challenged at getting up beyond that kind of 68, 69,000 level.
And one thing that's interesting for you as CEO is that the performance of this asset directly plays into the performance of your company's stock, given the interconnectedness of the two. For our viewers, some context, Marathon Digital engaging in mining digital assets, focusing on the Bitcoin ecosystem in particular. How do you navigate that as a company executive? What is your thinking on being so heavily impacted by the performance of this digital currency that does have a history of being really volatile?
Yes, Bitcoin is historically very volatile. You deal with it by having a very strong balance sheet. We have amongst the strongest balance sheets in the industry with, over $1.5 billion of Bitcoin in cash available to us and not too much debt. At the same time, we focus on diversifying our business. We started a portion of the business, which is a technology division, which focuses on selling digital infrastructure technology, especially liquid cooling technology, which is applicable to the AI space just as much as it is to the mining of Bitcoin. We have a full software stack for the Bitcoin mining industry as well that we've begun selling and have announced some recent partnerships around. And then we have a part of the business called energy harvesting, which focuses on leveraging Bitcoin mining and digital asset compute as a way to essentially generate revenues through alternative means. An example of that is last week, we announced that we have started a heating project in Finland. So we're heating 11,000 homes with the heat from our data center. And in that way, we can subsidize the cost of our electricity, essentially lowering the cost for us to mine Bitcoin by being paid for heat offtake. The same token, we are generating Bitcoin using methane gas off of landfills, which again lowers our cost to mine Bitcoin. So as that business begins to build over the next few years, we expect it to contribute significantly to lowering our cost to mine Bitcoin, whilst most other miners are just paying for electrical fees off of the grid, whose prices aren't going to go down. However, through this energy harvesting model, we can essentially subsidize our cost to mine Bitcoin.
Well, Fred, it's a great point on being defensive, and also I know you're working to diversify your revenue streams as well. I'm not going to ask you to comment directly on your competitors, but I am curious about a competitor of yours that's buying NVIDIA H100 computers, diversifying by renting those out to clients. I just want to get a sense of your thinking on that move. And do you think that that's something that you would prioritize moving forward as AI starts to, and has really been driving the success of this market and individual companies within the market?
I mean, it's a great question. So a number of our colleagues in the industry think that Bitcoin mining and HPC or AI cloud have similarities. They do. They both require a lot of power. But I'll give you an example of where those similarities end. If you have 200 megawatts of power and you're going to build that out for AI cloud compute, the infrastructure, the buildings basically that you need to build are about $800 million. And the NVIDIA equipment is about $3.2 billion. That's $4 billion in total. To use that 200 megawatts for Bitcoin mining will cost you about $200 million. So there's a very big difference in the amount of capital you have to have. And as you can see, the companies that really have gotten into this space are having to receive large capital injections from their customers. CoreWeave, did a deal with Core Scientific where they're essentially financing the infrastructure build out, and they're providing the compute. Hut 8 recently, today, I think, announced a $150 million capital injection from a CoreWeave affiliated entity. So what we're seeing is people trying to get into this business. But just look at NVIDIA's product announcements and think about technology obsolescence here. If the NVIDIA equipment is going to get 4 times more powerful at a similar power load, meaning the power required isn't going to go up by 4 times, then why would you be buying machines today if within 24 months you'll be 4 times behind the power curve? And so I don't believe today it would be prudent for our shareholders for us to be investing capital equipment, CapEx rather, in buying a bunch of NVIDIA machines only to have them obsoleted within 24 months. That being said, providing the equipment for the infrastructure, the picks and shovels, if you would, for AI compute are very interesting. And that's what our technology division is focused on doing with our liquid cooling infrastructure, because you need immersion cooling technology to keep these AI rigs cool, especially the next generations of NVIDIA machines and other machines that we expect to see coming. The other thing that is much more interesting, I believe, is the inference part of AI. You have essentially the learning models that you need to train, and then you have the inference. Inference is where the user really interacts with AIs. If you think about ChatGPT, when you ask a question, it's running an inference query. That's where the real volume will be, and that will be at the edge of the network in very different types of data centers running different types of machines, and that's an area we're very interested in.
Fred, as we wrap up here, I finally want to get your take on the upcoming presidential election. I'm curious from your perspective as an executive in the digital currency space, which candidate would be better for your marketplace, Trump or Biden?
So President or former President Trump has obviously positioned himself as the candidate that is pro-Bitcoin. He believes that all Bitcoin should be mined in the U.S. and has been very open in his relationships with Bitcoin miners and people in the space. The Biden administration has been very hostile to Bitcoin, through its various agencies, whether it's the banking and the so-called Operation Choke Point 2.0, whether it's the SEC, et cetera. I'm sensing a thawing of the cold, if you would, from the Biden administration as they realize there are 55 million voters in this country who care about crypto. That's a pretty large voting bloc. And while nobody in this industry wants it to be partisan, I mean, we believe that Bitcoin serves the needs of everybody. It doesn't have any political color to it. We think both parties should embrace it. And in Congress, we've already seen the Democrats in both the Senate and House of Representatives embracing Bitcoin and crypto legislation, the SAB repeal, and then the Fair Markets Act, both of them, bipartisan attempts to get something passed and that were blocked by the White House. So I think that what we're going to have to see is more bipartisan work on this to get it passed. But it really is a bipartisan thing. It's not one party versus the other on this.
Yeah, it's certainly become a bit of a political football as we head closer to November. Fred, thanks so much for being here with us. Really appreciate your insights. That was Fred Thiel. He's Marathon Digital Holdings CEO.